I miss my beard already. Does anyone else think that frosted mini wheats taste a little grassy? My girlfriend likes them, so I guess they're okay. What's up guys, welcome back to my channel. My name is Chris, and in this video I'll be talking about one of my favorite ways to invest in the stock market with ETFs, or exchange traded funds. I'll also be narrowing down my top personal picks. Before we start, if you wouldn't mind smashing that like button, it would really help out my channel. With the rising popularity of retail investing thanks to mobile apps like Webull, Acorns, and Robinhood, investing in the stock market has never been more accessible. If you're like the 99.999999% of people in the world, picking the right stocks to put your money in will prove to be next to impossible. Most people just don't have the time or resources to pick winning stocks consistently. Sound advice from Warren Buffett, the most well-known investor in the world, says not to risk all your eggs in one basket, and instead recommends the average investor should just buy and hold an S&P 500 index ETF, which tracks the performance of the top 500 companies in the United States over the long term if you want to see profitable returns. The ticker symbol most frequently mentioned is VOO. That's Vanguard's S&P 500 index ETF. The ticker symbol is the alphanumeric code that stock exchanges use to identify specific investments. Imagine this container of frosted mini wheats is an ETF, and each individual piece of cereal represents a company's stock. You own the basket, you own all these companies, instantly diversified. If one of these companies is performing badly, all those other ones there to smooth the ride for you. Now that you know what an ETF is, let's get into my top picks. Starting off with ticker symbol VTI. VTI is Vanguard's Total Stock Market Index ETF. It attempts to mimic the Wilshire 5000 Total Stock Index. Although it's called the 5000, there is closer to 3,600 companies in its holdings. This index tries to capture the average performance of every publicly traded US company, big or small. It's performed very similar to the previously mentioned VOO ETF because they're comprised of the same top 500 companies, with VTI having a little more, and they influence a majority of VTI's performance as well. Can't go wrong with either. A solid choice for someone that wants to capture the entire US economy without taking the time to research and analyze individual stocks, but has positive beliefs in the overall American economy over the long term. Both of them are passively managed, meaning the holdings aren't changed frequently by the fund manager. This results in a really low expense ratio. That is the associated cost with investing in this ETF. VTI and VOO both have a 0.03% expense ratio, which means you're only paying 3 cents for every $100 invested. The next ticker symbol on my list is ticker symbol XLK. Now, this is a sector-specific ETF tracking the overall performance of a few companies in the technology space in the economy. Notable names include Microsoft, Apple, MasterCard, Visa, and PayPal. Technology has been the best performing sector over the last decade, and my personal belief is that this trend will continue moving forward. The internet revolution has led to technology being basically necessity for every aspect of our lives, and I don't see the innovation and growth of the companies in this sector slowing down anytime soon. For an ETF being actively managed, it's got a fairly healthy expense ratio of 0.13%, meaning 13 cents cost for every $100 invested. My last and personal favorite ETF goes by the ticker symbol QQQ, aka Triple Q. This ETF tries to mirror the performance of the NASDAQ 100 index. That index tries to capture the performance of the top 100 non-financial companies in the United States. I don't know why the financial sector is excluded, but the investors in this index don't seem too unhappy about it. Since the internet bubble crash in the early 2000s, this index has outperformed the S&P 500 as well as the Russell 2000 small cap index. A big reason why this index has such massive growth is due to the 7 massive technology giants that, as of July 2020, make up more than 50% of its holdings. That's insane to think about. 50% of an entire index is wrapped up in just 7 companies, while 93 other companies make up the remaining 50%. Those companies being Microsoft, Apple, Amazon, Google's parent company Alphabet, Facebook, Netflix, and as of this week, Tesla Motors. The amount of influence and dominance these 7 companies have had on the stock market since the crash in '08 has been utterly out of control, constantly mentioned on the news and breaking all-time highs on a weekly basis. The massive hype behind these companies is justified as they're influencing all of our lives on a global scale. Not nearly as influential as those other 7, but notable names held in Triple Q are PepsiCo, T-Mobile, Starbucks, eBay, Ulta Beauty, and Zoom. For an actively traded ETF containing such big names with huge growth potential, it's got a healthy expense ratio of 0.20%, which means a 20-cent cost for every $100 you've got invested. There you have it. That's my list of favorite ETFs to be a diversified investor in the stock market. If you like this video, please smash the like button, consider subscribing for more random content, share it with a friend, leave a comment down below. Let me know what you guys want to see more of. It'll really help out my channel. If you haven't already opened up your own Robinhood account, check out my referral link in the description below. You and I will both get a free stock. Stay safe out there, stay hungry, and I'll see you guys in the next one. Peace.